financial markets, cryptocurrency, gold and silver, world news.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial turmoil explained.
Good morning, ladies and gentlemen, and welcome to the show on this Thursday, the 23rd of June, 2022. Thank you for tuning in. Glad to have you guys here. Now, you guys know I've been talking about this deflationary spike event for years, and I've told you that we're in it. When everybody else is talking about inflation, I don't call this a deflationary spike event for nothing. In order to go down, create like a spike that's being driven into the wood. It's like a point. It's like a flash crash sort of a thing on charts, you know. In order to go down, you have to first be up. And that's where we had the inflation. We were up. Everything's going down, right? And that's the spike. It's a spike downwards. And I don't expect it to last for very long. And that's why it's going to make the point of a spike. You know, how a long, thin point downwards and then back up again. I can also relate it to a whiplash. It's like a whiplash, and I've also said it's like a whiplash. In other words, how whiplash works is generally you're in a car or in a something and you get hit from behind. First, the rapid acceleration forwards slings your neck back. Zoom, you move. Like boom, you've been hit from behind. And then you have a sudden stop or a jolt. You come to a stop and then you go in the opposite direction and it whips your head back and forth. This is like a whiplash. It's the same sort of an effect. What we're going through right now is, and the Fed is causing it. And what we're going to go through is first inflation, and then it's going to deflate, and then it's going to be back to inflation again. It's like a whiplash. It's like boom, bang, bing, sort of a thing. So anyway, you're going to ask, well, what's going to come on the other side of this? Because I've talked to a lot about this coming, and I've told you guys it was coming for a while, and we're in it now, and what's going to happen after? Well, first thing is, directly in front of us is very rapid deflation. We're going to head toward deflation. First, it's going to start, and it's already started as disinflation. We're already in the disinflation, but the disinflation will turn to deflation, and this whole thing is not going to turn until the Fed's ready to make it turn. And so that's what we're waiting for. We're waiting for the Fed to change directions. And then this whole thing's going to turn back. On the other side of this, the rapid acceleration toward hyperinflation is going to begin. So that's what's going to happen. That's going to be the end result, is because this deflation doesn't know where to stop. As long as the Fed's staying tight and they're continuing with their quantitative tightening program, and they're continuing with their raising interest rates on the overnight rate, raising it higher and higher. As long as that continues, the economy is going to continue this sharp decline downwards. At some point, you know, the Fed's going to have to throw in the towel and give up. And when they give up, then things are going to spin in the opposite direction. Things are going to start to come back up again in the financial system. But the general economy is going to have been weakened to a certain point where it's having trouble managing. And all these people in the general economy are in countries like Japan, countries like the United Kingdom, countries like all through the European Union, in the United States, all of these countries, the people are going to need support. So they'll be forced to offer support to the people to keep them from starving to death. Quite seriously, because this is a depression. And that support is going to come in monetary support with these new central bank digital currencies. There's not going to be just one. They're gonna be a number of them from the different central banks, depending on what country you're in. That support is going to be the last demise of the fiat currencies, and so you just can't have a certain percentage of the population who's not working. They have hopeless to find a job. It's hopeless to reinvigorate the economy, and basically you've got an empire in decline. And so they have to support these people. And that's going to put further stress on the dollar to the dollar and these other currencies to become worthless quicker. As it's been up till now, the dollar is going to be maintaining strength ahead of these other currencies, because when a empire goes into decline, like the fall of the Roman Empire, it withers away from the outside first before it makes its way into the core. And the core of this Ponzi scheme, I'd say a multi-generational Ponzi scheme fiat monetary system, the core is the US dollar. And so the US dollar will maintain strength until the last. And it's going to be the last one to go down. But when it goes down, it's going to go down in a ball of flames and a hyperinflation. So what we're going to do is, when we complete this whiplash, first inflation, then deflation, and then back to inflation again. The inflation on the other side of this is going to be much greater and much faster, because of the support that they're going to have to offer the people to keep the people from rebelling. They're going to have to offer them this support. They can't let them starve en masse on the street because of the deflation. And that's going to be the death knell for the fiat currencies. And that's when you're going to see gold, silver, and cryptos really explode in price, is when they offer this support coming on the other side of this. And that's when you're going to see inflation hit like it's never hit before. You think 8-point-something% of inflation's bad? You haven't seen nothing compared to what's coming on the other side of this when the Fed throws in the towel. And so they're basically buying us time from this hyperinflationary depression by creating deflation. But the pendulum's going to swing pretty soon, because they can't do it. They can't do it for very long, because the economy is going to disintegrate too quickly. So let's get in there and take a look at the markets. Let's open up the charts here. Take a look. We're looking at the silver price bouncing up 7 cents to 21.49. But it's been hovering around this range, you know, about around 21.50 for a while now. Very sensitive. Gold and silver right now are very sensitive to mining production costs. They know better than to drive it down below mining production costs, because they know they won't have any silver for industry. And gold, you know, the miners just won't mine it unless they're going to make a profit. And the profit ratios changed drastically with the price of oil and energy shooting up, you know. And it almost, because it's so sensitive, this is why it's almost price bound, you know. Not to say it couldn't drop if this deflation gets worse, you know, because inflation also can, at a certain point, start to affect demand. Demand destruction can occur. And in that case, you can see prices drop back on energy. And so cost of production then can drop. And so we can see a drop. But, you know, I don't think the drop would be anything very huge. It wouldn't be a huge drop in the price, but we could see a drop in the price of gold and silver. But they're going to have to keep it above mining production cost. And this is very sensitive, this mining production cost thing, you know, and it's went way the heck up. Mines vary in their mining production costs. Some mines can mine it out of the ground cheaper than others. They're more cost effective at getting the metals out of the ground. But still, it's very labor intensive, as in energy costs. You know, the labor of the energy involved. You know, mostly a lot of it's diesel fuel. You know, to run big diesel engines and stuff, and generators and stuff, to run these big conveyor belts and rock crushers and stuff like that. And these big machines that have hydraulics. You know, they basically what happens is a big diesel engine runs a big hydraulic pump that works big rams, what's called rams, which are uh, big hydraulic cylinders that move these big earth digging machines that can bring the raw stone out of the ground so they can crush it up to make the silver, you know. They don't actually make the silver, but I mean get the silver out of the rocks, extract it, you know. 21.46 today for silver. Let's take a look now at gold. Here's our live chart for gold. And gold is 18.43. It's up $5 today. Cryptocurrency today, 910. So it's up a little bit. We're looking at 20,501 for a Bitcoin. Now, what I wanted to show you in the Dow Jones today, I want you to look carefully. We're in a bull market rally. I mean bear market rally. And if you look at the peak up here, around 36,700 or whatever, you know, and look at this decline in the market. You see this steep decline, and in fact, it's ascending downwards even faster right now, right? Well, you'd have to go above these trend lines, you know, the lower highs, you know. And if you take a look at these lower highs in this ascending pattern, you know, the last lower high was 33,180. Okay? So in order for this to go back into something profitable again, you know, where it's not sell the rally, it's sort of buy the dip sort of thing, you know, you'd have to get above 33,180, and right now you're at 30,555. So you're gonna have to see it probably more than a 2,500 point jump upwards in the Dow before we can get above this last high, this last peak. And if we don't get above that last peak, if we only make it up like 3/4 of the way up to that last peak, then we're still in this descending downwards pattern. Expect the next shoe to drop, in other words. And so I don't think it's going to. These Peasley, look at where it is right now. I mean, it could go up another 1,000 points or so and still descend downwards into this next big drop, okay, into the abyss. And so just because you see the Dow going up 100 points here, or a couple hundred points, or even 500 points in one day, doesn't mean we're back into a bull market or anything. We're still in the bear, and we're going to be in, we're just basically, it's almost like a cartoon or something. You see one of these creatures, and he's trying to gobble up another creature. He's down below the creature, and he's got his teeth, and he's munching on it, and it fights its way up and tries to get out of its mouth, you know, and it can't, because it's just gravity and that's where the market's going right now. It's in the teeth of this bear, and it's going to get gobbled up, you know. And I do not see it changing and going back to what you guys would like, or a lot of you guys that like to invest in the market would like. In other words, buy the dip and make lots of money, like it was for years there, going back. If we slide back in this market, look, all this time here, you see? See what it's doing is ascending up, or up, all that time there, you know? You can make money that way. And they got used to it. Like, it lasted practically forever, but now, look, you see what's happening? This descent. This descent downward. Up, to finally it peaked, and then now we're in the descent downwards. And we're going to continue in this descent downwards. You know? But don't bet against this market. Be careful. You could lose everything trying to short the market. Anyway, listen, guys. Let's move on and take a look. Crude oil today, 106. 106.17 on crude oil. Down 2 cents. Take a look at the MOVE index today, and the MOVE index is steadily marching up slowly. It's on 129 right now, but we see over the course of a year where it's been going. Bonds and rates today, we're looking at falling yields on the long end. 10-year at 3.02, and the US 30-year at 3.16, and quite a substantial drop on that 10-year. 12 basis points. 12.7 basis points. US dollar index 104.15. So, I'm going to tell you guys, we are fairly safe from inflation right now. The Fed has put a cap on it to a certain degree, except for food inflation and energy inflation. But even the energy inflation, they've kind of stalled it out now at this point. We see gas prices stalling, the price per barrel, stalling a little bit, and food prices might be to a certain degree not going up as fast as they might. The Fed is kind of slowing it. They are kind of slowing it down a little bit. They're starting to cause disinflation. And what disinflation is, basically, it's a lessening of the inflation you already have, And that's what they're doing. It's going to get worse, and they might actually spiral us into deflation as they continue. But it ain't going to last very long, because the whole system's going to start to break apart, and they're going to get scared. When the system starts to break apart, really starts to break apart, they're going to get scared. There's going to be a lot of bankruptcies. We could have a credit freeze even. Then they're going to pivot in the opposite direction. They're going to just turn 180 degrees, and they're going to start to support the system again. And we're going to see things start to come back up in the financial system, but not in the general economy. They will have destroyed the general economy by that time. The general economy will continue to disintegrate. In other words, people won't have any money to spend, and prices will start to surge again, upwards. At that point, there will be a general outcry by the people, and then they'll start the UBI, and they'll start the central bank digital currency to satisfy that outcry. And then the real inflation's going to come once that gets in place, and they start pumping that money out there, UBI to every person. Then we're going to see the hyperinflation. This all takes time. There's a period of progression from one stage to the next stage to the next stage to the next stage, and we're making our way through these stages. The early stages of the hyperinflation are going to be a feel-good stage. We're not to that stage yet. We're going through the tightening part that really does not feel good. This is a non-feel-good stage. The feel-good stage is when the money starts to pump out there again through UBI and CBDC and all kinds of money flowing out there, and when consumers are buying again. That's coming. That's ahead in our future. And they're going to pump out. It's very similar, in a way, to all of those stimmy checks that they sent out. That was like the UBI, except it wasn't. But the real UBI is going to be similar to that. People are going to have money in their pocket again. That's the feel-good stage. But that leads to the hyperinflation then, because these are going to be endless programs, endlessly sending money out. And because they have to keep supporting these people, they can't let them starve, or for the most part can't let them starve, or they'll have a revolution if they let them starve. What they'll have to do is they'll have to keep upping that support as the inflation increases, and they will probably keep up better with the UBI, Universal Basic Income, with the amount of inflation. They'll keep up better with it than they will with all these other programs like Social Security and your wages from your work and everything else. They'll be lagging behind. And so that'll lead to more people saying, hey, I'm going to quit working because I can make more on UBI. As soon as you click over to that UBI and get the central bank digital currency and get the wallet and everything and get connected to your own little bank account with the Fed, as soon as you do that, they're going to have total control over you and be able to know where you're spending everything, know what you're doing, you won't have any privacy in your life. And they'll have total control over your money. They can switch off your wallet if they want to, but that's going to be a hyperinflating system anyway. It's during that time period. When they get the probably about 8 months from now, they said the CBDC's coming in 8 months. We have a time schedule now. So about 8 months from now, that's when we're really going to see the hyperinflation. So we have a time schedule now, guys. We're not shooting in the dark any longer. Central bank's giving us a time schedule. Because they're in control over this whole menagerie, this whole mess. Oh, as it spins out of control and causes all of you tremendous problems in your life, blame them. Thank you for listening. Like and subscribe, and we'll catch you guys in the very next episode.